Hey everyone, this is Corey with Sims Investment Management, and this is another Teaching Tuesday. And this week I want to talk to us a little bit about the recent Robinhood IPO. For those of you that don't know, Robinhood is a really popular investing app that really makes it almost too easy for people to buy and sell stocks. And they recently just went public, and because they went public, they had to file some information that typically people wouldn't be privy to until you become a publicly traded company. And there are a couple things in their S1 that was really quite fascinating. One of them is going to be the fact that 50% of their users, or just shy of 50% of their users, are getting on their app daily. And of those users, they're checking their account about 7 times a day. And this is it's just way too much. Again, it's leading to this like gamification and this casino mindset of the market, which isn't healthy. And to be honest, is what drove a lot of the .com bubble pain that novice retail investors experienced, because they got in over their head. They thought that markets only go up. They started buying things with no fundamentals or don't make any money. And we all know how the .com bubble ended. There's a saying, an old saying, that successful investing is like watching paint dry. And that's why I say that checking your account 7 times a day is really insanity. 7 times a year, again, would be a lot. That's why you typically get like quarterly statements 4 times a year for an account. Warren Buffett used to only allow people to look at their accounts once a year because they know the human nature, the human tendency to just make knee-jerk reactions. Why I think this is even more fascinating is a lot of people think that trading on Robinhood is free. It's not free. It is the classic Milton Friedman, there's no such thing as a free lunch. So the way that Robinhood makes money is they have a spread in the buying and selling of the stock. So they benefit when people trade more. That's why they're going to ping you and try and prompt you to get onto their app and trade more. Yes, they're not charging you a direct transaction fee, but you're not getting what's called best price execution. Okay, so every trade that they make, they're making a small sliver off of that. It's similar to when you buy or sell a house, right? There's a wide spread there between what the buyer and the seller is potentially willing to pay. And then typically that gets closer and closer, and agents make some type of money off of that transaction. That's what Robinhood's doing. And they're also making a ton of money off of cryptocurrency and Dogecoin. Dogecoin was a coin that was made as a complete joke. It has no tangible value, and yet they're generating like 40% of their revenue off of people trading something that is completely just a joke. It's mind-boggling. It really is. So I just would be cautious if you hear about people using Robinhood, making sure that they're using it correctly, and it can be a great tool, but also recognizing that Robinhood, just like many of the other apps, you are the user, you are the profit center for them, and maybe there's more to this story. If you want to talk more about Robinhood, I'm very fascinated with this story and educating people on this. I'd be happy to. Just please reach out and share this video if you know anybody that would like to watch it. Thanks. We'll see you next time.